Okay, everyone, welcome back. Welcome back to my YouTube channel. And we haven't done any recordings here. We haven't done anything on this channel in a while, and so I decided to come up with a weekly breakdown. And in this particular episode, I'm going to be breaking down. I had in mind to break down two pairs, which was the Aussie CAD and then the pound yen. So I had the idea to break those pairs down, and so I just want you to see, what I'm looking at for the coming weeks, and then let's see how it goes. So welcome back to my YouTube channel, and before we get on with it, just please hit the subscribe button, like and share, and then I think we're at 93 subscribers, so please let's get ourselves to 100 subscribers. So please hit the subscribe button, and let's get on with the breakdown. So as you can see, I have a bunch of instruments here, but in the coming weeks we're going to be keeping our eyes on just a handful of these, and what we are looking at right now is the Aussie CAD. So normally we like to start out from the weekly time frame and identify the most important levels to us. So on this particular chart, we can see that I'm going to get out my brush tool. Okay, so on this particular chart, we can notice the highs here, and we can notice these lows, and we can notice these lows. And remember, one of the major things about our trading philosophy here at Chicago FX is that the market constantly rotates between the major highs and the major lows, and also testing out major zones where the market has collected liquidity in the past. So that is one of our major philosophies in the market, and right now what we are looking for is for the market to test these lows, or at least somewhere around these lows. But at the end of the day, we're not going to get there all in one move, but we know that there's a 90% chance that we are going to get to those lows here. So that is what we are looking at, and I'll get down and I'll start to show you why we're looking at it that way. Now, looking at what happened here in the market, we had the market come into the zone, and then we started to consolidate. And then after the consolidation at this area, I was looking for selling opportunities. Well, the problem is when a lot of traders see the markets, most traders don't ever anticipate that the market is going to get down to these areas here. But at the end of the day, we anticipate that, using our strategy and what we look at and based on our trading philosophy. And that is because we've tested the market, and we've seen that the market is always testing those highs and those lows. And now looking at this area here, this is our next target around 91,000 on the 0.910 on the Aussie CAD right here. That is what we're looking at the market to come right back into. But we are not just likely to just get there right away. It's not like the market is going to open up and then we just start heading out to that zone. Now if you notice, there's a zone here. There is a zone that started this run to the downside. You can see this block of orders here that started this run to the downside, because it's not just about looking at chart patterns alone. You have to combine areas of order blocks and institutional order zones. And we can see, let me pull out this one too. You can see this zone here started this massive rally to the downside. So what that means is that you can see we still have a high level of imbalance here. So I'm expecting the market to maybe correct down, trickle up into this zone, break this high, create a pattern, and then we start looking for the drop. So that is what I'm expecting on Aussie CAD. So it's not like we're just going to jump in and then we start looking for the sell. So looking at that, when we take this trade, if we get involved in a trade here, our extended target is to these lows here, where we know we have a 90% chance of hitting these lows. And then our first target is to get out at these zones, to take off something on the table when we hit these lows here, and then we trail the stop all the way down here. So that is what we're going to be looking at on Aussie CAD. So we're expecting the market to come up into these zones, create a form of correction that tallies with this level here, and then gives us that indication that we are about to drop, and then that is exactly what we're going to be looking at on the Aussie CAD. So looking at Aussie CAD, we have a short-term buy bias. Of course, I'm not going to be interested in taking this buy to the upside. That is because, of course, as you can see, it's an overall downtrend. I don't want to be trading against the trend. I'd rather just sit on my hands and wait for the correction to to pan out, and then get involved in a much higher probability trade, and also in a trade that has a higher risk to reward going to the downside. So that is what I'll prefer to, that is what I'll prefer to do on the AUDCAD. So moving over to the pound yen, I just want to quickly show you, looking at the pound yen, there's a very big opportunity at stake here on the pound yen. Now if you take a look on the weekly time frame, you can see that this is an impulsive leg, right? After the market had this impulsive leg, it went into this corrective phase. And looking at the corrective phase that we've just come out of, you can see that if you drop down this time frame, we start to see things clear for what they are. Look at this impulsive leg, and then you see the market has broken out of this corrective structure. So what exactly are we anticipating here at the Chikodo FX here? Now, when the market printed this low, you see the market, we printed this low right here based off of this impulsive leg. You can see this impulsive leg and then this corrective phase. Now, of course, there are a bunch of other things we look at to determine what, whether to qualify this zone. Now, you can see we've had a 1, 2, 3. We've touched the ascending channel for the third time, and then we broke out of that. Just take a moment to show you that. You can see how we broke out of this impulsive leg. And now breaking out of that impulsive leg leaves us, okay, that wasn't what I wanted to pick out. So now breaking out of that impulsive leg, you can see this rising, you can see, you can call it a rising wedge, you can call it whatever you want, but you can see we're looking at it as structure based. So you can see we broke out of this ascending structure, and then we started to correct around this zone. We started to form a corrective structure around this zone. Now this whole corrective structure is pointing us to this zone at these areas here, pointing us to those lows, right there. So what we're going to do is to drop the time frame to the 4 hour, and when we drop the time frame, okay, now that wasn't supposed to happen. Let me clean up that. Okay, now when we drop the time frame lower, let me pull this back a bit. I don't like that messy stuff. When we drop the time frame a bit, you start to notice one thing. Look at this ascending structure. We've broken through that. But if you can choose to rein this back, if we decide to pull this back and treat this whole structure as one piece of its own, this is what we're going to get. So looking at this, we've put this structure here, and then we want to, okay, we go from up here. Why am I picking out the wrong thing? We go from here. We'll go from here. You can see that. You can see this structure panning out. You can see how the structure is already starting to look. So now you can look at it as this is an impulsive leg. And if we duplicate that, I'm expecting the market to at least run down to test these lows here. There's a major low here, there's a low around here. You can see these lows here. So I'm expecting the market to complete this equal measured, when we see AB equals CD pattern, to complete this move to test these low right here, and probably before we start to see a reversal, before we continue, because it's not likely that we're just going to just take off from here and then we're running down. No. So this is it. You can see this impulse. You can see this is the impulse, this is the correction, this is the continuation. I think I have a call coming into my phone, so please, sorry about that. So you can see that is the impulse, and then the correction, and we're anticipating the continuation. So of course there are a lot of things we are going to be looking out for. Let me take this off since it's not really ready. That's not what we're looking at yet. So there's a lot of things we are going to be looking out for us to get involved in this trade here. We're going to be looking out for certain things to pan out on the lower time frames. You can see all our time frames here. Higher time frame, we do a lot of swing trading at long term, so we can catch very big moves, and just with low risk and high setup probability and all that. So I'm expecting the market, we could go straight from here, create a type of structure and drop, or we could see the market pull back to catch traders on the wrong side of the market, create a type of structure, and then we drop from there. So whatever happens, what we're looking for overall on pound yen, as we have it here, is we're looking for a major drop to the downside. So let me throw in one more pair. Let me throw in one more pair. Let's see if let's look at USD CAD. I was looking at USD CAD for a while. Okay, so USD Canadian, no. Okay, dollar Danish krone, I'm trying to find what pair should I pick. What pair should I pick? Should I pick EURUSD? Where's EURUSD? Okay, so EURUSD. EURUSD, we have a similar scenario. I just wasn't quite done with this analysis. So EURUSD, what we're anticipating is, you can see, looking at going out to the higher time frame, we see it is unsustainable for the market to just keep running up like this in the long run. The market cannot just keep flying to the moon and just keep going and going and going. No, that is very, very unsustainable. The market is not likely to keep doing that. So we have this high here where we anticipate and expect the market to come to in the future. We expect the market to come all the way up here. Then we have this low here. Okay, let me just mark those out. We have this low, this high, this low. Okay, now we have that. We have all that. We've seen this zone on the weekly. Now we drop down to the weekly, to the, what's it called again, the daily time frame. We also see that we see this high, and then we see that the market broke out of this structure. We can say the market broke out of this structure and is retesting that. But the problem there is that we have a potential that we could come all the way back up here. There's a long line of liquidity around this zone. There's a whole long line of liquidity around this area here. And the guys who trade QML will tell you this is the liquidity void. This is they have different names for it. They have the liquidity void, and then they'll get in at this level here, you know, and just to target that. This is the long, this is the supply zone that triggered this major fall to the downside. This is the zone that triggered that. So there's a possibility that we might get back there, but how we're looking at it is very simplistic. Now, oh shit, not again. Take this line, take this, pull this in here, take this one, we pull this in here, take this one, pull this in here. Now we know that the market could come up, break these zones and drop, or we could ultimately come up here completely. They could decide to run the highs. Nobody actually knows what's going to happen for real. Nobody actually knows these things. But what we're looking at overall is that we're expecting the dollar to gain strength in the coming week. But then we also recognize the fact that the corrective phase of the market is not over. We can see the dollar showing us short-term weakness and then, you know, long-term bullishness by dropping to the downside, by, you know, falling. Or the market could go from here, or it could come right back up to the highs and go from here. But overall, we're looking for sells on EURUSD, and irrespective of what happens, we're not going to be, you know, going long, you know, just because we feel okay the market is going to push up. Maybe because the market is going to push up to this zone. We don't know how far it's going to go before it starts running down, because you don't want to just be okay. This, you see these few lines here. If you didn't get in at this zone here, then there's no need jumping in and buying at the highs. That is so unprofessional, and that's so how retail traders trade, buying at the highs, and whenever they see the lows they start to sell the lows. No, you don't do that. You look for the high optimum points at the highs, and then you look for shorts. In the short term, we could test this channel for the third time and then have a run back to the upside before we see that fall. It's a possibility, but no one can ever tell for real, because we have the US elections coming up, and then we expect the market to be shaking up for real in the long run. So these are just the three pairs. I've decided to just throw this on the YouTube, and just, you know, I haven't analyzed the markets for a while. I haven't really created content for a while, so I just decided to drop this one and, you know, see if I get any feedback on that. So please just let me know in the comments. Don't just watch and walk away. Let me know in the comments if you liked the breakdown, if you, maybe there's something you have a contrary opinion, or there's a pair you'd like to see me break down, you know. So please just let me know in the comments. And there's a free Telegram channel where I call out my trades most of the time. I'm calling out the trades, and I'm, you know, showing you what I am looking at in real time, and occasionally I will drop a signal or two. So feel free to, you know, join the Telegram channel, and then, you know, at least you get to see what we're doing in there. So until I see you next time, guys, just, you know, trade your plan, and plan your trades and trade your plan. So thanks, guys. Cheers.